Welcome everyone once again. It's time, so I'll just hand over to Francis to start his presentation. For those of us who are new to this session, Francis will introduce himself. So Francis, over to you.
So thank you, Albert. My name is Francis, and we are the African Center for Tax Policy Research. We normally organize sessions like this where we meet and discuss, share ideas about tax policies. So today we are continuing what we started some time ago. About 2 or 3 weeks ago, we wanted to see how employees can manage their PAYE. And we did a part 1. For those who missed the part 1, you can find it online. We have the address, the recordings on the web. You can easily go and listen to it so that you can see how the part 1 went. So we don't belong to any political party. We look at the issues as it is, and we discuss. Those of you who just joined, today is not for debate, but mostly you see us discussing some policies. We bring our ideas together, and where we think that it is important for us to, share with people who can make policy, we do same. Today, we want to continue on, like I said, from part 1. We were looking at managing employee taxes, or PAYE. And we went through what we describe as the sources of income that are subject to tax under our law. We said that employment income is such one, and then business income is one of those. Those of you who are in business and doing your small businesses, and then those who also want to invest, the law brings all these incomes under the law and tax them. We also discussed how the law considers income from employment, and technically the idea is that any gains or profits that come from a person's employment, the law considers it as taxable, with a few items that the law excludes. So the inclusion, or the things that the law requires us to include, are that anything that you receive, which cuts across wages, salaries, leave pays, commissions, gratuities, overtime, bonus, personal allowances, travel allowances, entertainment allowance, and all those allowances that we receive from employment, the law sees them as income that we have earned from employment, and therefore it should be taxed. One aspect which we want to focus on now is any other allowance that is either paid in cash or in kind. This, the law says that it's also a benefit, and therefore it should be subjected to tax. Last week, the last time when we met, we did not discuss much on those benefits in kind. So if you look at the law, section 4 again, it lists some items that should be excluded when we are looking at your employment income. And some of them we have already discussed during our last meeting. One thing that we have to understand is that the employee as taxpayer has very limited room for tax planning. In other words, if you receive income, you are likely to have most of your income taxed, especially if it is in cash. And so we came up with some opportunities for reducing our tax liability. And we said that for purposes of tax planning, we considered 4 main: personal reliefs, contributions to provident fund, mortgage, and then donation for worthwhile cause. These things, we discuss them, and I believe that if you get hold of the recordings, you understand how to take advantage of the personal reliefs and all the 4. Today, we want to consider the benefits in kind and some few other tools that, as an employee, you can use to reduce your taxes. Like we said earlier, the law has indicated what we should include in the calculation when we are dealing with employment income, and almost everything that you receive, including benefits in kind. The law also specified those things that we should take out, and we have also elaborated it in our earlier on. And now what we want to focus on in this part 2 is what we call the benefits in kind. The items that normally when it is given in cash, the law will see it as a different angle. But then if it's given in kind, then you can go away. You can have some leeway to be able to operate. And we are going to consider 3 main of them, and then later we'll consider the remaining 2, which I call additional tools. Normally, you find this benefit in the fourth schedule for those of us professionals practicing. If you want to see how benefits are available that you can use, you look at the fourth schedule. We want to look at the company car and then fuel. If your company gives you fuel allowance or a company car, how can you manage your way to at least cut some tax bill from your pay slip? We also want to look at accommodation that is provided versus rent allowance. Once we will look at loans, staff loan. It's something that was codified in the 2015 Act 896. We also look at how bonus and overtime can be used to manage your PAYE, especially for bonus, which many people do not do. Okay, so first of all, let's look at car. Indeed, it is nice if your company gives you a car, and it can come with different angles. If you're a top executive, you can have car with fuel and a driver. If you are a middle person, maybe car and a fuel alone. If you are ordinary or not too middle, you can have only a vehicle only. Then the company will ask you to go and buy your own fuel. Or you can have your fuel, you can have your car, and then the company will give you a fuel. All of these things, the law has considered it as a benefit, because if this is not provided for you, you would have used Uber, or maybe you would have even used your own salary that has been taxed already to pay for this vehicle and transport. So under the fourth schedule, it says that the benefit consisting of the availability of or the use of a motor vehicle, which is provided to the employer by the employee, is a benefit, and that should be taxed. Because the categories come in different forms, we are saying that if you are given a driver with car and fuel, then the law considers that at least 12.5% of your total cash emolument is the value of the benefit that you have received. But then it places a cap and says that with a car, fuel, and a driver, the maximum should be 600 Ghana cedis per month. There's a reason for capping it. So we don't go above it. So if we apply the 12.5% and it is more than 600, then we limit ourselves to the 600. If you are giving fuel and then a car, then we take 10% of your total cash emolument, or up a maximum of 500 cedis. If you are giving vehicle only, we are saying 5% of your total cash emolument, or 250 cedis. Or if you are giving fuel only, maybe Tom card, again, it is 250 cedis maximum, or 5%, whichever is the lowest. So we see this table and we think that there's a tax planning measures here. Most of us are giving fuel coupon, or most of us are giving transport allowance. Normally, when it comes to car, you have to avoid as much as you can, avoid cash allowances or fuel allowances if you want to reduce your burden. And mostly because these figures are fixed, it is normally better. So here, for example, if I'm giving vehicle with fuel, the law says the maximum amount that I can be taxed is 500 cedis. The company can give me more fuel than 500 cedis. They can give me 10,000 Ghana cedis of fuel, depending on maybe my rounds that I do for the company. Or let's say the company can give me a Tom card of, let's say, 3,000 cedis. That 3,000 cedis, the law says that the maximum that can be added is to 500 cedis, which means that I'm able to save 2,500 off. And we believe that this is a good tax planning measure that employees can do, so that when your employer is giving you cash transport allowance, negotiate and discuss and see, okay, can you get it in the form of a kind allowance? Then you can make some savings. Let's look, for example, Kofi, who has a salary of 20,000, his employer decides to give him 4,500 in the form of transport or fuel allowance. At the end of the month, Kofi is going to have a total income of 24,500 cedis. If you subject the 24,500 cedis to tax, Kofi is paying around 5,662 tax. However, if Kofi employment remains the same, and assuming that Kofi is even not giving more fuel, but he's giving the same 4,500 with the same basic salary of 20,000. Here, Kofi is going to be given a Tom card. In other words, the 4,500 is not going to be paid to his bank account. For that reason, Kofi is considered as receiving a benefit in kind. Now, because we are going to, out of the 4,500, we are going to add only 500 or whichever to Kofi's basic salary. Kofi is able to bring his total tax liability down to 4,430. Meaning Kofi is able to save around 1,232 Ghana cedis per month. So depending on the figures that we have illustrated here, you can choose to go for a benefit in kind, because when it comes to fuel and transport allowance, the amounts are fixed versus those that are given in cash. The taxman, when he sees that you are giving cash allowance, he goes straight away and then begin to tax you on the cash amount. No exemption, no exclusion. So that is one avenue that you can manage your taxes. So possibly you can start discussing with your employer and say, oh, look, I like Tom card instead of giving me this amount. The second element which we want to consider, not too good a tax planning tool, but depending on your level in management, it can also be good for you. It has to do with accommodation. Sometimes your employer will give you accommodation, they will go and rent for you versus them giving you rent allowance. The law is that if you are giving accommodation with furnishing, which means that they have furnished everything for you, then 10% of your total cash emolument is added as a benefit in kind. Let me state here that when it comes to accommodation, there's no limits. So your tax planning measures around this place, you need to analyze it critically to see which one best fits your situation. If you are giving accommodation only, maybe they will rent for you and then you have to go and furnish it. 7.5% of the total cash emolument is added as a benefit in kind. Maybe you have your own house, so you only need furnishing. So the company will go and furnish it for you. Then we are saying that 2.5% of the total cash emolument is added. Or you are sharing accommodation. You have your rooms separately, but maybe you share one kitchen or you share one bathroom. That one too is 2.5% of your total cash emolument. This is not a representation of how much the company is paying for your landlord. So the company can pay 100,000 Ghana cedis to your landlord as your rent. The 100,000 is not what we are looking for. We are coming out with fixed percentages, which is based on your total salaries. Then we can use it to compute the benefit that you are receiving. Here too, we are saying that the tax planning measures is dependent on your basic salary. So you need to analyze this very well, because if you are not careful, the benefit may not be too much. We saw that if you are provided with accommodation only and it's not finished, we are supposed to add 7.5% of your total cash emolument. So same illustration, John has 25,000 salaries, and then the rent allowance that is given to him is 2,500. At the end of the day, John's total amount of 27,500 will be subjected to tax, and 6,480 will be the tax that he will pay because of the accommodation or the housing allowance that has been given to him. If the company decides to rent for him, then he's able to bring his tax liability to 6,293. Again, you notice that the amounts are not too different. That is why the tax savings is only 187. So when it comes to housing or rent allowance, you discuss with your employer and then you do your analysis and see which one will best fit your situation, and then you can decide. Here too, all the time, look at it whether the cash allowance is good or the benefits in kind is good. So these are the two tax planning tools that I think that we can begin to explore. There are other general exemptions that we can also look at. For example, if your employer is providing accommodation for you, and those of us who work with companies who are into timber mining, building, construction, or farming, and the accommodation is provided on the site, the law is that accommodation is completely exempt. So there's no benefit in kind that is you are deriving from such accommodation. The assumption is that, look, if your employer is providing accommodation for you in a farm, this accommodation may not be any serious accommodation which is located on the farm. So we don't consider any benefit from it. Again, most of us or most employers will give cash allowance or cash payment for medical bills and all those things. Some employers tax employees for this. Again, the law is saying that if you provide reimbursement for dental or medical health, let your employer know that you are not supposed to pay tax on it. But then that medical or dental reimbursement must be available to all full-time employees on equal terms. Now, the last one, which I've highlighted in red, which I want to talk about, is some lacuna that normally employers can use to escape. They're saying that a payment made to employees on a non-discriminatory basis, and by reason of the size, type, and frequency of the payments are unreasonable or administratively impracticable for the employer to account for or to allocate to an individual. That amount should also be exempt. You are not supposed to pay tax on it. Sometimes an employer will provide some benefits which cuts across everybody. For example, canteen. When the employer is providing canteen to every employee and everybody goes there to eat, somebody can go and eat one plate, somebody will go and eat half a plate. The rule is that under that circumstance, it will be difficult for you to allocate the cost to each person. So because it is available to everybody on a non-discriminatory basis, look at it very well and see if you can push it under this condition, and then you don't pay tax on those ones. So those are the tools that you can use to manage your PAYE. I want to talk about loan benefits, which was introduced in 2015. It used to be there under a silent clause in the old law. It wasn't specific, but in the new law, it was provided. And it appears that the people we had in mind for this particular provision were the bankers. You remember that bankers sometimes get interest-free loan from their employers, from the banks. They don't pay anything. But the law now considers that if you get some loans from your employer, it can be construed as a benefit from the employment and therefore should be taxed. So he introduced two conditions. There's one condition where you are not going to be taxed or no benefit is going to be attributable to you. And it's saying that if the loan is from the employer to the employee and the terms of the loan does not exceed 12 months, in other words, you take maybe salary advance or some loan and it is not, the repayment is no more than 12 months, and you have other outstanding loans, and that outstanding loans together with the new loans is no more than 3 months of your basic salary, then we will not consider that as a benefit from the loans, or the employer has not given any benefit really to you. So you can go scot-free. We consider that one as a normal salary advance. However, if you miss on any of these terms, for example, your repayment term is more than 12 months, then immediately the taxman will see some benefits because there's no salary advance that should go beyond 12 months. So because it is, you are missing on either the term of the loan or you are missing on the total loan, which is more than 3 months of your basic salary, then he brings you to the second category, then come and quantify it so that he will see that there's an interest benefit to you. And the interest benefit, he calculates it using this formula. He's saying that A minus B over 4. In other words, he's taking 1/4 of the interest. And he's looking at the statutory rates, the difference between the statutory rates and then the interest rate that your employer has given to you to pay. So assuming that your basic salary is 40,000 and then your other allowance is 18,000, then you receive a loan from your employer amounting to 16,000 at the interest rate of 8%. Of course, nobody will give you a loan of 8% in Ghana today. And normally, even the base rate is around 19%. So the government will not, the GRA will now consider this reduced interest rate as a benefit to you. And this reduced benefit is the difference between the statutory rates, which is currently the 19.6 or 19.5%, minus the interest rate that you are paying. Then they will calculate it and take 1/4, only 1/4, and then add it to your salary as a benefit in kind. I have small calculation here. When we share the slides, you understand. Now, fast forward, let's look at how overtime can also be a source of tool for you. Most of us may do overtime, but then our salary or the law does not see us as overtime. So if you do overtime and you are paying normal taxes, don't be offended. Overtime is under the law supposed to be done by qualifying junior employees, and it is taxed at only 5%. You see, the idea is that over time, everybody is tired or everybody is at home and you are working, you are doing extra work. So that income that you get from overtime should be taxed at a reduced or a very minimal rate, and the rate is 5% instead of the graduated rate. How do we apply it? We are saying that somebody who should enjoy this 5% reduced rate should be somebody we call junior staff. And the junior staff should be someone whose annual employment income, in other words, all his total income should not be more than 18,000 Ghana cedis. So if your total income for a year is more than 18,000, completely you are off. You are not a junior person, and you are even not supposed to be doing overtime. You can do overtime all right, but you are a manager. In other words, you are a big man. So overtime, your employer or your payroll manager will see it as overtime, but you will not enjoy this reduced 5% rate. Now, assuming you fall within the category, then this is how we tax it. We are saying that where the overtime paid to the person is not more than 50% of the basic salary within the month, then we take 5% from the overtime. And the excess beyond the 50% of the annual base of the monthly basic is now taxed at 10%. That is how it is done. So if your overtime is no more than half of your basic salary for the month, take only 5%, and then the remaining one is going for 10%. So if I'm an employer and I have people who fall within this category, especially security guys, security men who earn, let's say, 400 Ghana cedis a month or 700 cedis a month, certainly I should price or I should design their structure in such a way that most of their work can fall within the overtime category, so that they pay the minimal tax instead of graduating it at the higher rate. So it's a good tax planning for people who earn very small amount of income. What about bonus? It's also a good tax planning tool. Most of us work, but we don't have bonus at the end of the year. Most companies, especially government workers, they don't have bonus at the end of the year. Now, the conditions for bonus, again, is that bonus is paid to only people who have done extra work. You have worked very hard and you have earned some bonus. So you should also be taxed at a reduced rate of 5%. But how do we do it? We also don't want everybody to push their basic salary to bonus. So we are saying that the bonus should not be more than 15% of your annual basic salary. So some companies will pay 13th month. We normally call it guarantee bonus. They also pay additional bonus based on performance after annual performance review, so that at the end of the day, they will now pay the total bonus to you. So if your employer is not paying bonus, what you can do is that agree with them and say, look, I want to take, at the end of the year, I want to take so much in the form of bonus, so that at least I can reduce my PAYE from the graduated rate to 5%. And so let's structure my basic salary so that I can have some bonus paid to me at the end of the month. Or even if they pay 13th month, then your employer should begin taxing you at a rate of 5%. But one rule is that when calculating the bonus, we want the bonus to be related to the year in which the performance is related. So for example, if I'm being paid 2022 bonus, usually it will be based on 2021 performance. So we should use 2021 basic salary. So why not discuss with your employer and pay some bonus at the end of the year so that you pay tax at 5%? Or why don't you structure your lower income earners their pay scale so that at least some portions of it goes into overtime? So ladies and gentlemen, like we said, these are the tools that you can use to manage. We have talked about the cash allowance versus vehicle term card, for example, accommodation versus rent allowance, and we have spoken about loans, and we have spoken about bonuses, and then overtime. So we promise that we don't want to keep long, so we'll end here, and then where people or members have questions and comments, then we can come in. Thank you, Albert. So if you are there, take over, please.
All right, Francis, thank you very much for, as usual, this very insightful session. For those of us who joined a little later, we're saying that for the times that we are in or that we're about to enter, some of these things, there's a saying that a penny saved is a penny gained. So some of these things will be helpful to us personally, and even we can suggest it to our employers in structuring our compensation so that it can release more money to us or limit the amount of tax we pay. So thank you very much, Francis. And the floor is open for any comments or clarifications or additions, personal stories that you would like to share. Thank you. So the floor is open.
Hello, good afternoon.
Good afternoon, Ibrahim.
Thank you very much for giving me this opportunity. I followed the discussion, and I think the points that Francis raised concerning the tax planning measures, they are good. But one area where I think I have a bit of concern will be how to structure the bonus. Because if I heard him right, you negotiate with your employer so that your basic salary will be reduced. The basic salary will be taken on monthly will be reduced so that the graduated tax that you pay month on month will also be reduced. Then you take all those basic salary which was reduced in the month, you take it at the end of the year as a bonus so that you can pay only 5% tax on it. So from the tax aspect, it will be good. Your tax liability will reduce in terms of structuring it that way. But if you look at another aspect of benefits which are associated with employment, which is SNET, that's pensions, it will also get a hit because the pensions are based on your basic salary. So if you intentionally reduce your basic salary so that your tax liability will come down, at the end of the day, it will hit back at you because you'll be earning lesser pensions when you go on retirement. That's an observation that I've made. And if there is further clarity to it, will be much appreciated if there's further clarity on how to manage the tax aspect of the bonus and the pension, the danger of losing pension when you reduce your basic salary. Thank you.
Ibrahim, I think it's an interesting observation, and thanks for bringing this in now. So if you want to protect the base for pensions, yes, that can be done. Most employers will always want to reduce their 13% contribution. So assuming that we want to protect the base for the pensions, we can pass through this bonus element through all the other allowances that we can receive, the monthly allowances. Like I mentioned to you, we are always careful when you receive cash allowance. So those cash allowance, why can't you call it some form of bonus? There's nothing preventing you to have your own policy that says that you earn monthly bonus. For example, this month we have achieved a target, so we are paid monthly bonus. Nothing prevents us from that. So that at the end of the day, if this total bonus does not go above 15% of the annual basic, nobody catches us. We are still within the law. So for me, if you can't do it through the basic salary, you can do it through any other constant allowances that comes. So instead of you giving me responsibility allowance, 4,000, please call it a different name. Let the policy go back and restructure and say performance bonus for every month, 4,000. I'm able to go away, take some tax off, rather than calling it a responsibility allowance. I don't know whether that sounds better for you.
It does. It does.
All right.
Yeah. Thank you. So everything must be in the policy. It should be backed by policy, right?
Oh, of course. I mean, you can
Yes.
discuss with your your HR. This one, those of you who are experts and accountants, you discuss with the HR and tell them that this is within the law. I think that most of the banks do. Banks, they do quarterly bonus or weekly bonus or monthly bonus. In fact, we have some sales force who get bonus for outperforming. And if there's a document that says you can be paid a bonus every month, GRA cannot do anything about it.
Okay, thank you.
All right, thank you, Ibrahim. Francis, there's a question from Joe Donko. Is there any section of the law that talks about guaranteed bonus?
No, Joe, the law did not even describe what bonus is. It just says bonus. And bonus is as your employer has called it. So guaranteed bonus, normally we use it to refer to the 13 months. You see that 13 months is not based on any performance evaluation. So if the employer gives you 13 months, it is a bonus because it is you have just earned it. It's not part of your basic salary. One time I had a discussion with some employer, and then they were saying that they were treating the 13 months as an allowance. Then I told them that no, then you are subjecting your employees to a higher tax. Why don't you consider that one as a guaranteed bonus? So you can have one which is based on performance bonus and then one which is guaranteed bonus. At the end of the day, they are all bonus. And the rule is that don't let it go above 15% of the annual basic salary. So Joe, the law did not define what performance bonuses or guaranteed bonuses. All bonus are bonus. Okay.
Okay, Francis, thank you.
I think Jacob has his hands up. So maybe Jacob, if you can talk.
All right.
All right. So thank you, Francis, for the wonderful presentation. I have 3 issues. Number one, just to find out if there's any limit on how much an organization can classify as fuel allowance. Say how much you are given by way of, say, Tom cards or Go cards. So for instance, if your basic salary is 5,000, is it reasonable to have Tom card with a value of, say, 6,000 or maybe 5,000 every month? Is there any element of reasonableness in respect of the benefits in the form of fuel provision? Number 2 is on the provision of accommodation by the employer. So for instance, I go into an arrangement where the employer would rent on my behalf. So they engage the landlord, and because of tax savings, it's calculated as benefit in kind, which will be the 2.5 or the 7.5 or the 10%, depending on whichever arrangement was used. Now, what happens to the withholding tax on rent that the employer is supposed to pay? Is the employer ready to bear that, or because it's a form of tax savings to the employee, that will be passed on to the employee? Then my final one has to do with the loans. So is it loans and advances or just loan? So if it's just advances, then we won't do any computations because the advances may not come with any form of interest. Or the interpretation is that the loans include advances, such that even if an employer gives an advance without an interest, that difference between the commercial rates and, in this case, the zero interest on the advance, that computation has to be done and will be crossed up with my salary, or is just limited to interest bearing loans. Thank you, Francis.
Okay, thanks, Jacob. And let's look at the first one. So the first one is whether there's any rule about Tomcat. The answer is no. This is employment arrangement, and if you are staying far away, your employer decides to give you a car and a fuel, there's no limit. The employer can give you 100,000 Ghana cedis, and there's no limit on that if the employer is prepared to pay that amount. The only thing is that we can only take that fixed amount that the law has specified. That is what we are going to include in your basic salary, in your salary calculation. That is all. Nothing prevents you from taking it. So if they are giving driver and fuel and a vehicle, and at the end of the month, your driver say he has your car because it is a V8 or it's a V8, and so you have consumed 15,000 Ghana cedis. That is it. You go ahead and consume your fuel. We are going to add only 600 cedis in this case to your basic salary. There's no limit. Number two, on the rent. So you will notice that, yes, the issue of withholding tax will come in, but withholding tax is not your tax. Withholding tax, it is not your business. Yours is just to go ahead and withhold. So if your employer goes to rent for you and they are withholding, it is the tax credit. The landlord is supposed to suffer the withholding, and then you go and get a withholding certificate for him to claim the tax credit. So it is not your business. In most cases, what some landlords will do is that, I don't want to pay any tax, which is of course illegal though, because they are supposed to pay their taxes. So if the landlord is a tax compliance person and you don't have any physical resistance, withholding tax is not your problem. If the rent is 2,000 a month, it's 2,000 multiplied by the number of years advance you are going to give. It's what you are paying. At the time you are paying, the law says withhold. If it is commercial property, you withhold 15% on the gross amount. If it is a residential property, you withhold 8%. Give the net to the landlord, and then you are done. There is no burden on you or your employer. The situations where we have is maybe you are going to rent some single room somewhere, and then the landlord is this native people. You talk about tax, no, he said no, he doesn't want to pay any tax. Of course, those people, he will tell you that he doesn't care about any tax. He doesn't know any tax law. But in a well-structured environment where you are paying somebody who knows that there's a tax obligation, you, the employer or the employee, you don't have any business with thinking about the withholding tax. So it's not your problem at all. Now, the last one, when I finish and you want to come up with further questions, you can come. The last one has to do with the loans. The law is that if you are giving any loans or advance, okay, it's any loan, not necessarily the employer being in a bank or whatever to provide loans, or no, it's not like that. A benefit consists of a loan, and it can be a salary advance as far as it is not a gift, and as far as it is not something that you have earned, it's not your money, then it qualifies for that. If you are given a salary advance, you've not earned the salary yet, and so it's considered as a loan. Normally, sometimes we even call it staff loan or staff advance. All of these things fall into this category. The company has given you money, which you are supposed to pay back. Now you can pay it back through PAYE deduction. At the end of the month, we'll deduct it from your salary. If it comes with interest-free and the payment goes beyond 12 months, then we will consider it as a more or less a long-term loan, and therefore the government will try to impugn the commercial rate to you. And the commercial rate, they look at it from the statutory rate. Statutory rate minus, if you are paying 0 rate, then it means that minus 0. Then divide it by 4. Then they will take 1. So you can see that this one is a very flexible interest benefit computation, just 1/4 of it. So A is the statutory rate, B is the interest rate that you are paying. If you are paying 0, that means that is 0. Then divided by 4, then that becomes the interest that we are going to charge you for that. If you are paying some interest and it is even more than the statutory rate, then of course there's no even benefits. I hope Jacob, you are with me.
Yes, sir. Yes, sir. Thank you so much.
Okay.
So, Francis, a follow-up question on that.
Yeah.
So, in the same vein, if I'm enjoying a benefit, let's say the interest rate that I'm paying is lesser than the statutory rate, because of that, it's a benefit to me and I'm paying tax on it. In the same vein, if the interest rate that I'm paying is in excess of the statutory rate, wouldn't it be equitable for me to get it as a tax benefit?
And no, here it is not a benefit that you are getting from your employment. You are not gaining anything. You are rather expensing. And you know the way we deal with employees, we don't normally deduct any expenses from their income. The expenses are called relief. The reason is that we don't want employees to come with plenty receipts and say, I paid for my children's school fees, I did that. So when it comes to employment income assessment, there is a limited room for deducting of expenses. And even those ones that we are capable of deducting, the law has specifically stated them, and they are always reliefs or their mortgage interest. Those are the only circumstances, and possibly pension deductions. They've been stated categorically in the law. Otherwise, we can't allow any deduction again. If you start allowing people to deduct some of these things, you are going to muddy the waters and you can't handle individual employment assessment. So it's a policy driven. We don't allow deductions. And I think the law states clearly under section 8 and section 9 that in the assessment of individuals or employment, the Commissioner General shall not allow any deduction from the employment income.
Yes, thank you.
Albert.
Yeah. Please, any other questions or contributions as we try and wind up? Questions, contributions, going.
So maybe our next meeting, let's discuss some of this IMF policy, and possibly in our own small corner, we can come up with some homegrown solutions. What do you think could be the solution to Ghana's problem, the practical means to solve some of these problems? And we'll get one of us to also lead a discussion, Albert, if members agree. We can do that, and then we can also, somebody also proposed that we should dissect the e-levy, the pros and cons. Assuming you are the Minister of Finance, what would you have done? So maybe in a very short weeks or few weeks coming, let's start thinking around it. It can be open discussion or roundtable discussion online, so that we can voice our views and then see what we can come up with.
Okay, Francis, you actually took the wind out of my sail. I was going to suggest that our next session, hopefully in a month's time, following on from what you just said, the open session, not just IMF, but since they are in, hopefully it helps push some of these important reforms through. We could brainstorm some good ideas and put out a communique or something as the Africa Center for Tax Policy. So we'll be in touch with you. As part of housekeeping, what I was going to suggest is, I don't know how you got the notice to join this session, but we would ideally like to have your emails and telephone numbers so that each time we're about to have an event, we can send you a notification so that you can join. And what we'll do is we'll encourage you to try and recruit other like-minded people to join us so that it will be a community that discusses primarily relevant tax policy and related matters. So if you don't mind, you can post your number or email in the chat box. We'll collate it so that going forward, we'll just develop a mailing list for future programs. I see that Sami has posted his. I hope we all post it before we sign off so that we can follow up with you from here. So if there's nothing else we have to say, we would like to thank you very much for giving us 1 hour of your time this hot Friday afternoon. Would like to wish you a safe weekend. May God keep us even in these times. And I hope to see you all here once again in about a month's time. So don't forget, post your email and your number before you sign off, and then we'll follow up with you subsequently. Thank you very much.
Albert, next session will be on the benefits in kind, and that will be pretty short because we don't want to keep members on the page for long. So we'll look at other benefits which are paid in kind. We'll look at the fuel coupon. Nowadays that petrol price is going up, should the employer give us coupon or they should give us cash? All of these things will be discussed in our next session, and we'll share the link so that we can meet and then debate this matter. So if there are no questions from me, Albert, over to you.
All right. So once again, thank you very much, Francis, for this very insightful session. Before I forget, I would like to encourage those of us who participated in this one that please tell your friends about this virtual tax clinic. A lot of these things are not widely known, and it would be good to share it with friends, colleagues who will benefit from some of the insights. And actually, it's free consultation if you think about it. Because ordinarily, you have to pay for some of this info, but it's free. So let's get the word out. And if there are no questions, have a good evening and thank you for your time. Francis, thank you very much. We owe you one. Thank you. Thank you, everyone.